Traders, yesterday's session took out Tuesday's highs only to reverse back down. Was this a fake breakout or are we shifting into a new trend? With jobless claims, GDP and durable goods data hitting today, we expect a little volatility, so let's break it down. Now, before we dive into the chart, here's what's moving the market today. Jobless claims, GDP report could shake up the macro trend, and of course, durable goods data, which is another key economic release. With price testing key inflection zones, today's numbers could determine the next move. Let's dive in. On the 10-day volume profile, we continue to see a widening value area with the value area shifting lower again today. No major changes in positioning, just more development in this value area as we said. Our key level is holding the 6003, which confirms selling pressure could be fading. Trading back inside these value areas could signal some consolidation. A key shift on the daily chart. The one-time framing down is now broken at 6016. ES is now one-time framing up with a low at 5945. Weekly value is shifting lowers, but buyers might be making a move. Because 6016 was yesterday's bull target, now the question is, can they reclaim it? Can they hold it? So yesterday's session was a very tricky one, with buyers buying across the weekly VWAP with large market orders from the open. Testing the 6016 high, but heavy passive selling kicked in at 6021 to 6023. Buyers were fighting back at 6045, overlapping with this Tuesday buying zone POC, which formed a higher low after taking out yesterday's high. This might signal that potential balance is forming. But if 6023 to 6025 holds, we could see value shift into that last week's value area again. On the New York market profile chart, we see that ES from the open took out yesterday's selling tail right here, only to get rejected at Monday's lows 6024. After reversing down, we were unable to get out of yesterday's value area low, and we left the buying tail below 5930 untouched, which makes it a delicacy for bears. Bulls, on the other hand, would have to reclaim this 6020 to 6024 area to confirm their strength. On the 1 hour chart, we see that February's open 5982.25 acts as a magnet for last days. Strike prices have shifted significantly higher, with a high of at 6,185 and a low at 5,925, matching Tuesday's low, signaling interest in higher prices. If buyers can defend 5,990, momentum could build upwards. So for a game plan, my line in the sand will be this 5,990, which also signals the low volume node midpoint. Above 5,990, we have this ledge at 5,998. Where longs can start targeting the highs at 6,023, 6,029 and 6,040. And above this 5,990, we have this other ledge, which is February's open 5,982. Sellers can start from there targeting the lows at 5,960, 5,949 and 5,925. So we are on a key inflection point. Bulls broke the one-time framing down, but sellers haven't fully given up yet. Above 6,003, we expect continuation, and below 5,990, sellers will look to retest lower levels. The news releases today could set some major next moves, and as always, hit the notification bell to stay updated. If you're not staying on top of the market will stay on top of you.